Okay, that's not bad. How's that? Welcome, everybody. Thanks for joining us today. We are broadcasting live uh, where Helge is in Boston, Massachusetts, and I happen to be in Portugal. Um, and so I'm glad to be here. Glad to have everybody. We're super happy to have Helge back. And as you know, we can't hear or see you. We know you're there, but we encourage you to ask your questions through the Q&A and the chat room, and we'll get to as many as possible. We have a whole group of people coming on today, so as your questions come to mind, please be sure to post them, and we'll get to them as many as we can throughout the presentation. And then also, after participating today, if you find this interesting for you or others that you might know, please feel free to reach out directly to Helge. We'll make sure that post-webinar, you not only will have the contact information and they will of yours, you are certainly welcome to communicate directly to them. And as you know, we stay out of the middle and make sure that you can get the information you need from them. We're going to do two series. This is a overview, what we call a luminary series, talking about the organization, sort of the state of the family, multifamily business in the greater Boston area and suburbs. And then we'll be doing something next week, which gets further into the weeds about the structure of the investment. And for those that want to participate again or bring others that might be interested as a result of seeing what you see today, we're also going to post this to either or both of the Family Office Insights YouTube channel or somewhere on Helge's platform, so you can not only see the recording or hear the recording and view it, but see more information about Helge. So with that, thank you all again for being here today. Super appreciate the Family Office Insights membership and community, as you know, and grateful for your participation. We're going to go around the table here and do some little quick background, and then talk a little bit about Oleg and how this all came about, and then get into the presentation, if that's okay with you, Chris. Is that right?
That sounds great, Arthur. Thanks so much. I just mentioned also our pronunciation is Helge Capital. I know it's a tricky one, and we've definitely heard Helge before, but like to call it Helge.
So I make mistakes regularly, and there's another one. Thank you. Thank you for clearing that up. Okay, take it away, Chris.
Yeah, so we're Arthur, thank you. We're super excited to be presenting again to the Bevelis Group and the Family Office Insights community. We spoke at the end of last year with this group, and since then we've made some tremendous progress on both of our current projects, which we're excited to share some of today. By way of introduction, my name is Chris Manatis-Larnell. Work on acquisitions and capital markets here at Helge, joined by John Gosnell, heading our operations and capital markets efforts, Darren Nolet, leading our finance team, and Adam Guzman, also on operations and capital markets. In terms of agenda, first we'll provide an introduction to Helge Capital, review our history, who we are, what we do. Second, we'll offer a brief outline of the Boston metro multifamily market and why we like it. Then we will jump into talking about Revere specifically, and why we're so excited about this area of the Boston metro in particular. And then finally, we will discuss our current development and value-add investment opportunities, and would love to just provide an introduction today and hope to have many follow-up calls with if there's interest. So our goal through 2022 and really into 2023 has been to both broaden and deepen our investor base with an aim towards establishing long-term programmatic investor partnerships. So we're looking forward to getting to know many of the offices on the call today, and hopefully having some of those personal follow-up calls in the next week or so if our strategy aligns with your investment priorities. So in terms of history, Helge was founded by a successful Boston-based entrepreneur, that's Oleg Uritsky, who previously started, ran, and successfully sold transportation and healthcare companies. Since 2014, the exclusive focus of Helge Capital has been on building and managing our Boston Metro real estate portfolio. And during that time, we've assembled a highly experienced and capable team and built a vertically integrated firm. At the same time, Helge has achieved an impressive track record, acquiring over $400 million of real estate across 22 acquisitions. Most recently, a $30 million acquisition in the third quarter of 2022, and completed 10 exits, generating a 26% IRR to investors and over $122 million of disposition proceeds. We've honed a specialty in identifying and investing in multifamily assets within the emerging neighborhoods of Boston. As we fast forward to today, we're a focused sponsor and remain a focused sponsor by geography and asset type. We're exclusively Boston Metro and exclusively multifamily real estate. Within that focus, we pursue two strategies: opportunistic development and value-add projects. We have both projects are currently underway today. But regardless of strategy, we seek to own and operate, develop what we call workforce housing. So we're not into buying trophy assets. We don't build ultra high-end luxury flashy product. Really like to build great places for people to live that also represent an attractive value proposition to them. One of our hallmarks is investing substantial personal capital alongside our investor partners in every deal that we do. In the current deals that we'll talk about today, that represents over 30% of the total equity. A key differentiator for us as a firm relative to others. And in terms of our investor partners, these are family offices, high net worth individuals, many of whom have done multiple deals with us over the years. Very, very deeply valued partners. And on the current deals we have today commitments from over nearly 50 of such entities. Again, many of whom are involved with multiple deals, multiple active deals at the same time. When we look to the future, we'll continue to build our expertise and actively pursue our dual strategies of opportunistic development and value add in multifamily throughout Boston Metro's emerging neighborhoods. We will remain a high conviction and, really important to note here, disciplined quality over quantity sponsor with a target of 3 to 4 new deals per year. Of course, that's going to be dependent on the market conditions and opportunities we see. We'd rather avoid bad deals, so we'll do fewer deals, but we want to do deals we really believe in and want to put our own money into. So given our history of success and strong growth as a firm over the last few years, we've seen our opportunity pipeline continue to expand. And we've found that the more active you are, the more opportunities you see, the more credibility you gain amongst local real estate participants. So in this regard, 2022 was a pivotal year for us, in that we broke ground or acquired over 90 million of multifamily projects in the Boston metro. And so with all of this, it comes a real need for capital, and it brings us to the purpose for today, which is our hope is to actively build relationships with other like-minded family offices, with a goal of ultimately developing these into programmatic investment partnerships over time, that continue to build and grow deal through deal, year by year. So taking a step back, we like to kind of start with the question of why Boston, and why Boston multifamily in particular, for people who are unfamiliar with Boston, which we have to remind ourselves is, we live and breathe it, the market every day, and it's not everyone does. So we try and take a step back and say, one of the key things to focus on here is a structural undersupply of housing. Supply here in Boston Metro is just persistently below demand, and it's even more so. That's a common theme currently, but we think it's even more so the case here than many other places. So why? On the supply side, we really see high barriers to entry. Zoning restrictions, slow municipal permitting processes, existing density of housing stock. Boston and surrounding communities, it's just an old communities in many cases. They're very built up. Scarcity of well-located, undeveloped land, and expensive local construction costs, all of which stand in stark contrast to some markets in which housing has boomed recently. Thinking particularly about places like Texas, Florida, Arizona, where supply can just be added much more freely and quickly to meet new demand. At the same time, while supply is constrained, in Boston, we just see very stable, high demand for housing. Why is that the case? Well, in Boston, our key industries, are things like life sciences, biotech, healthcare, higher education. So our local economy is really underpinned and undergirded in many ways by world-leading, recession-resistant industries that attract capital from abroad, funding year in and year out, students year in and year out. And these industries notably also tend to be generally higher skilled, higher paying industries that are not mobile or cyclical. I know, Arthur, on our last call, we talked about, Boston, we didn't even mention it, but Boston also has a very strong presence in financial services and tech. And
State Street, Fidelity, right? Yeah.
Yeah, but we really look at the key differentiators here as life sciences, biotech, healthcare, higher education, and part of the excitement there is just these industries being located here has also led to a 50% retention rate of greater Boston area students after college, which has led to a population increase of 10% in the last decade. And we fully expect this to continue. So with this supply demand imbalance that we have, and we look in some cases as why multifamily, and what we'd say is kind of as a backdrop is some of the dramatic recent rise in interest rates, leading to an unaffordability of home ownership. It actually positions multifamily very well to steadily raise rents, especially when you consider this relatively robust local employment and wage outlook for our key sectors. So, just to take a step back and kind of frame the issue, average home price in the Boston metro is now just about, if not over 800,000. So it really starts to make a two-bedroom apartment renting for 3,000 or even 3,300 or 3,400 look extremely reasonable. Rough numbers, we look at, 800,000, 20% down. So first off, you've got to have saved the down payment, 160K, with an interest rate of 6.75, 30-year fixed mortgage. It's a monthly payment of close to 4,200. Before you include things like real estate, taxes, insurance, or condo fees. So just taking it a step further, on a typical home, then that results in 50,000 or so of annual debt service, resulting in nearly $75,000 of income necessary that would be required to pay the average Boston area mortgage, no other expenses after taxes. So if we just take a rough cut of 30% on the mortgage payment, we'll look at the total required income. Jumps to well over 170,000 to avoid being housing cost burdened in Boston. So ultimately, that's an example to get us to the point of saying it results in many higher income, higher credit renters by necessity, looking for value in places like Revere, from which they can easily commute to their job centers in Boston, Cambridge, or the surrounding suburbs. And so that's why we kind of transition next to, why Revere? Why is Revere uniquely positioned for this to capture some of these higher income renters that are maybe not willing or not able to afford a house at this point in time in Boston. And we look at Revere as exciting in many ways in its own right. Revere is a key part of the Boston Metro. It shares a border with Boston. It's one of the most vital, rapidly developing corridors in the region. Urban rents have skyrocketed in places like Cambridge, Somerville, Boston, and it's led to a lot of young professionals increasingly seeking relief in places like Revere. So Revere's 2020 to 2030 projected population growth we see is expected to be 10.8%. Places it among the fastest in the Boston metro communities, and reflects an additional 3,000 new Revere households by 2030. So even with the supply pipeline that we can point to in Revere, it's just apartment supply just vastly lags demand. So you can see on this slide the blue line train. So Revere, important to note, it's a transit-oriented community. Boston's key rapid transit MBTA Blue Line offers direct, reliable access to downtown Boston in just minutes, and it runs directly through the heart of Revere with multiple stops. And it's been
is it like 10 minutes? I'm sorry to interrupt, but it looks like,
sure.
Is it fit 20 minutes? What is it?
Yeah, so if you're in the southern part of Revere near our project, it's Sora, you'd be under 15 minutes. So I think it's 13 minutes from the Beachmont or Suffolk Downs stations directly into Government Center in downtown Boston.
Yeah, nice.
If you're a little bit further north, you pick up a few minutes, maybe it's 15, 17 minutes, but ultimately this is a very quick commute. And often the train, I think, for these purposes, is faster than car. And so the MBTA has been very active in investing in these blue line stops. Suffolk Downs and Beachmont, the two stops you see here, both are really poised to be dramatically enhanced as part of the Suffolk Downs mega development, which you can see rendered here, which we'll discuss much more later. But Revere time, it does offer convenient auto access to Boston, Cambridge, points north, Route 128, real key job centers in our region. And also a short drive, you can see here, 5 minutes to Logan International Airport. So transit oriented is one thing, but we think kind of the unique Other part of the puzzle here is the natural beauty and recreation opportunities that abound throughout Revere. So you can see it's on the water. Obviously, from this picture, it's home to very popular Revere Beach, 3.5 miles long, wide sandy bathing beach. You can walk it, you can jog along it, you can go swimming. Multiple nature reservations. You can see here in this slide to your left is Belle Isle Marsh Reservation. And in our locations, we have two currently active projects in Revere. We really prioritize this proximity to parks, nature reservations, the beach. Really, walkability and accessibility to the beach is a key for us. So, we think it's truly unique to have that at your doorstep, while still being so close to the downtown core. And so this is this combination of nature and transit nature. We, of course, haven't been the only ones to recognize this. Institutional investment in Revere has just picked up dramatically in the last 10 years. And Suffolk Downs, as you see on the next slide, is really a key example of this. It will be, when completed, the largest private development in Boston's very long history, at over 161 acres, 16.2 million square feet. It'll be a brand new master plan neighborhood, and importantly, a mixed use neighborhood, not just housing. It'll have 5.2 million of square feet of office and lab space, and be home to over 15,000 jobs. And while this rendering looks great, it's not just about something that's in the future. Suffolk Downs is under construction now, broke ground in the summer of 2022. And really its importance in anchoring Revere and really all of the points north of Boston can't be overstated. And now on this slide, we have another interesting development that we'd highlight. Happens to be next to our value add project at 190 North Shore Road. And it's a new project by Redgate, which is a developer with a long history of successful projects on Revere Beach. And we think it's really telling that this newest project for them is the northernmost point of Revere. So it really emphasizes that institutional development has now permeated the entire 3.5 mile stretch of Revere Beach, truly from Suffolk Downs all the way up to the Point of Pines neighborhood. So this project, Gibson Point, it also broke ground in the summer of 2022. It'll be a 291 unit multifamily with ground floor retail and residential. And we're incredibly excited to have the leading asset directly next to it. We think of this really as a complementary and not competitive situation. To us, emerging neighborhoods, transformative new buildings being located next to ours, it's a real positive. So we talked some now about Revere. Now we can jump into some case studies of emerging neighborhoods that we look at as guidance to what we think Revere will be like over the next 10 years. And I think one of the most striking of those for anyone who's been to Boston recently is probably the Seaport. And so the Seaport, you can see here, this is 2010. This is not, 30, 40, 50 years ago. This is something that many people here, I know many people in this room can remember. It was filled with parking lots. And if we fast forward to today, for the Seaport, it's a fully built, this is not rendering, this is actually Google Earth, amazingly. These buildings exist. It's a fully built out mixed use community with a vibrant eclectic mix of housing, of hotels, of offices, of retail, of residential that, or of retail, of restaurants that really rival any other place in Boston. When we take a look now at Assembly Row, this is in Somerville, another community that borders Boston, directly north of the city. Assembly Row, you can see the tracks there is transit oriented, like Suffolk Downs. It's on a different line, the orange line, as opposed to the blue line. But this is again 2010. And if we fast forward today, we can see the master plan mixed use community that's sprung up. So we go from a small section of some shops to a fully vibrant mixed use community again, with thousands of residents and jobs all on site all together. Next example would be Alewife in Cambridge, and this is on the red line. So again, you can see the tracks, transit oriented, a lot of parking lots. You know, some very savvy developers looked at this and said, you know, surface parking around a transit hub, let's build this more densely. And then you kind of fast forward to where we're at today, and you can see again, biotech, labs, housing, offices, retail, residential. So it's all kind of a good way of segueing into Revere Beach before and after. So Revere Beach, this is just 2013, very open, a lot of parking again around tracks. Fast forwarding to today, this is some of the institutional capital that we've seen come in to kind of create this new neighborhood along the beach where people live, work, play, that we think is at a much earlier stage than places like the Seaport or Assembly Row. And, you know, excitingly, we have been a part of this with our development at 90 Ocean Ave, which we assembled and undertook in 2019. You can see here, it's unbuilt. It's a patch of land, and then again today, 90 O is a vibrant 75 unit community. We have a number of developers also have developed around this site as well, realizing the value in the location. So,
which one of those is yours?
The center right there.
Right here.
Yeah, if you highlight over
Right there.
that,
There you go. Yeah.
that with the roof deck.
You know, it's striking, Chris, that the contrast between just a short time ago and what has been developed is the capacity getting sucked up for the multifamily as quick as it can be put on the market.
Yeah, I would say absolutely that's the case. I mean, we look at this as a situation of structural undersupply in the Boston market for a very long time, and just a ton of pent-up demand to be in any one of these places. So we've seen occupancy remain very stable and very high. It's an attractive place to live, and you know, fortunately, with some of the industries that we have in Boston and our ability to access them, like biotech, life sciences, healthcare, higher education, you know, we have a place to go in terms of any kind of we don't think we'll get to oversupply.
So
situation.
to give you an example, Arthur, we opened 90 April of 21, 75 units rented in 2 months, 3 weeks. We had anticipated about 6 months, and we did it in less than half that time.
Yeah, with the capacity. Yeah, it's interesting. So I don't want to slow you down, but just for context, we have a question about, and I know the answer, but I'll let you guys answer it. You're not just buying, developing, converting, but you're also managing these properties for the most part, correct?
Third-party buildings, we only manage.
Yeah. Yeah, just for context, if somebody asked that, so as you go along there, they can keep that in mind. Thanks for that. Carry on.
See, unique, I think, strength of ours to be a vertically integrated firm like we are. So here's just the quick case study on 9DO. You can see it's been a fantastic success for our investors. We're thrilled with the project. Pleased with the area and how we executed. And I think it's a great segue to our next deal and some of the investment highlights we'll hit for Sora Revere. And you can see here Sora Revere located at 93 Bennington Street. It's on the lower right-hand corner of the slide. The business plan here was opportunistically assemble and permit parcels directly next to the largest private development in Boston history, Suffolk Downs. So we saw this land as a tremendous ability to, I would say, ride on the coattails, but be part of the new neighborhood emerging in Suffolk Downs, and to assemble it and permit it just prior to that project breaking ground. So our plan here really is to at Sora is really to follow the same game plan as 9DO. Our 75 unit ground up project we're just talking about. That project, for context, it's about half a mile north of Sora. So in some ways you're in a very similar neighborhood. Sora is even closer to Suffolk Downs. And so it's an extremely rare parcel in the sense that it's walkable to both public transit as well as Revere Beach. That's a key thing. So in a lot of places you get one or the other. With Sora, you get both. It's 114 units, 100% market rate, discounted permitted land cost basis here, 60 grand a unit. We've seen other transactions in the 70,000 range. As we kind of look at today, construction here is underway. Broke ground on this project last summer. We completed driving piles in December of last year and anticipate going vertical with our framing shortly. So it's really a time to be involved in a development project because many of, not all, but many of the big unknowns with development come along the stages of whether the project gets permitted, whether it becomes fully entitled, whether you can arrange the financing, whether you can sign a guaranteed maximum price or other contract with a general contractor and actually get under construction. In this case, despite it being a new development, all of these things are behind us. And so, another thing that we look at when we think about returns is, the timing of cash flows, the timing of the project is really important. And so today, versus say 6 months or even a year ago, we're much closer to those cash flows kicking off and really ultimately a sale or refi of the project. So out of a 2-year construction project, starting over the summer, and we're now about 6 months in. So, ultimately with a targeted delivery date of next year into what we think will be a very strong submarket with Suffolk Downs next to us, with emerging demand. We're very happy to be developing this and having our timing coincide the way it has and way it will with Suffolk Downs right next door. So I guess, hitting on the highlights, what drew us to these parcels, why we like the project. It's a transit-oriented location. I've done this walk myself many times. It's a 4-minute walk to the MBTA Blue Line Beachmont stop. It's a very easy walk. It's not difficult. We're not saying it like you're crossing highways or, it's a very straightforward walk, right? You even get to a Dunkin' Donuts on your way to the train station, which is excellent for some people commuting. That train station offers a 15-minute ride into downtown Boston, but from this location, You also are easily able to access Boston or Cambridge if you choose or don't want to ride the T. You can see here on this slide, we emphasize that it's very close to Revere Beach, a wide sandy bathing beach. You'll have 40 acres of public open space and trails at Suffolk Downs. So one of their key features is that out of 160 acres, a quarter of that will be open space that we think will be an amenity to the whole neighborhood. And you're across the street from Belle Isle Marsh, which has hiking paths overlooking the Atlantic Ocean. Really kind of a hidden gem in a lot of ways that people drive by and don't necessarily appreciate it, but if you lived across the street, you certainly would. And at the same time, we look at the kind of the value proposition here again. And the simple way we frame it is $1,000 a month for 15 minutes commute to Boston. So underwritten rents here for us are substantially below comparable properties in downtown Boston. Sora Revere, we're looking at about $1,000 less compared to a downtown Boston rent. So if today that were $4,300 for downtown 2-bed, that's 33 or slightly higher for Sora. We think that's just a great value when you consider that there are many things that make Sora unique and special, even relative to living downtown. I mean, you don't have the beach, you don't have the nature that you do if you were like, say, Seaport or downtown Boston. And we really think here Suffolk Downs is, again, a key driver that can't be overstated. It's under construction now, major employment center, regional employment center, regional draw, could easily see people who live at Sora be people who are also, working at Suffolk Downs, going out to eat in the restaurants, shopping there, hiking and walking along the trails. It's just it's a very exciting place to be. And so we'd say that also kind of bears repeating, it's a closed deal. It's under construction. While it is a development, we're very far along in the process, and it's a fantastic time to get involved as we approach the end of the equity raise here. More of a case study than anything else. We can highlight another property. Here's some photos of work that have been taking place recently at the site. So you can see this is, again, like we like to emphasize, not something that's happening in the future, but really something that is happening now. So we are building, this will be built, and it's happening. So it's a great time to jump into the project at this time.
Can we talk about that for 1 second, Chris? So jump back to the page that has the interest rates and the depreciation. And I think I might get this wrong, but yeah, just almost, you went past one more forward. That one. So what I noticed is this 30-year, 3-year interest only, you guys locked in at 5.25%. I mean, that's like.
Want to clarify though on this that was an average as of our production for these materials. So that is not a locked rate.
Okay.
On this, our other deal, which I think you're thinking of potentially, Arthur, our value add deal, that is a locked rate. So there are some nuances here in the structure which we can speak more to. But we do have, it is 3 years interest only, that's correct, and it is a 30-year term. So we do have really an unprecedentedly long term here. There's not a situation where we're going to be forced at an inopportune time to access capital markets to refi debt. But that is not a fixed rate.
Yeah, and the plan will be 18 months, 17, 18 months time. Good, we'll fix it, you know, because typically the construction loans are floating rate loans.
Yeah, you're breaking up a little bit, but I got the point. The other thing I wanted to mention, and this part I also could get wrong, is as a potential investor in this project and others, because you're investing in the project, the depreciation passes through as opposed to in a fund where it's often difficult to do that, right? So the goodies that come along with investing in real estate inure to the benefit to the investor in this project.
Correct, yeah, you know, it's an LLC, so per tax code, the LLC is a pass-through.
Yeah.
Yeah, absolutely. You know, we always hesitate to give too much guidance or talk too much about taxes and how
Of course.
because it's such an individual situation. But yes, investors in this deal would be receiving a K1, would be a pass-through, and would get the benefit of depreciation. So
Right.
yeah, it definitely is a different thing than say, you know, all right, I'm going to buy some real estate investment trusts or something along those lines. It's a different animal to be investing in directly in the partnership.
Right. And if you don't mind taking one more question, I know I'm slowing you down here, but
Sorry, yeah.
We have a question about the trend of construction costs, material, labor, et cetera, and what is the effective cap rate to build versus buy. So I'm sure you guys are monitoring that closely.
Yeah, no, that's an interesting question, and kind of the way that we look at that yield to cost on a trended basis. I think here we're at 6.8%. And I think if you look at it off of the first year, that's a little bit lower. That's, you know, 4.4, 4.5%. You know, one of the things we look at too is recent transactions of comparable institutional grade assets in Revere Beach. And fortunately, we saw a number of those in 2022, trading at, believe it or not, cap rates that were under 4%. So, you know, we get it. Interest rates, cap rates, they're connected, they're moving. But at the same time, we're very focused on the secular growth story of Revere and the transformation that's happening here. And I think many institutional investors are as well, looking at this as a place where it's a place that they look at a very stable kind of rent growth over time. And it's just a market that maybe used to be non-core or secondary, that now we're seeing the likes of UBS and Invesco and other kind of large players in the real estate space come in and buy assets around us at very low cap rates that I think if you told us even a couple of years ago, we'd say, wow, Revere Beach under 4%, that's pretty unbelievable. But so that's kind of the world we're in. Is it's, you know, a lot of moving parts, a lot of things moving quickly with the cap rates and with interest rates, but many transactions now in 2022 and 2021 as well, very supportive in late 2022 as well, very supportive of kind of a very low cap rate institutional quality type environment.
Is there an anchor investor in Suffolk Downs, or was it aggregated through pension funds and so forth?
Yeah, so I know that the developer on Suffolk Downs is HYM, and they are a mega developer in Boston headed by Tom O'Brien, who's a former leader of what used to be called the Boston Planning and Development Agency, BPDA, and previously the Boston Redevelopment Authority agency. So, and it's so, you know, very well connected, very, very experienced mega developer, heads Suffolk Downs, and he's had a number of successful projects of similar scale around both Boston and Cambridge. So and I know that, just in terms of some of the articles that have come out, it's been pension funds and some very large family offices that have made some of the anchor investments, but they're looking at that, and I think funding it very much on a project by project basis.
Yeah, great, thanks. The only thing I want to mention is, before we run out of time, just highlight, at least by one example, how one participates with you.
Yeah, no, so it's a great question. So the way that it's a very straightforward process for us. We have an investor portal that easily allows you to review all of the deal materials that you've seen today. It allows an investor to review our operating agreement, our subscription agreement. And then from that process forward, we could execute those documents electronically and proceed to wiring funds. So it can be a very quick, very, very straightforward process handled through our secure investor portal. And just as kind of a highlight, as of today, we've raised just about 86% of the total equity for our development, SOAR Revere, and we're syndicating down that last 14%. So this is a closed deal in the sense that financing is in place, contracts are signed, construction is underway, and we have a carve out of 14% of the equity remaining for investment today, which just equates to, in numbers, around 2.4 million of total equity of 17.1 million on that deal. And so we're happy to set up calls to discuss further with any individuals who might be interested in investing, walk through the process. I handle that kind of directly along with my team, and we found this process to be very, very straightforward. Yeah, what else can I help with, Arthur, on that point? Is there something you're looking for specifically?
That's exactly right. Just before we lose some people, I want them to know that they can, jump in, look at the documents, participate, what type of check you're looking for. And is the Point of Pines available as well?
Yeah, well, that one Point of Pines, just in terms of a quick overview there, 72-unit value add opportunity, closed it in September of last year. We're executing the project now. Very, very, it's well underway, and it's gotten great traction in the marketplace. We've got over 5 leases signed to date at rent levels above our underwriting. So we underwrote Point of Pines at $2,875 a unit for large 2-bedroom, 2 baths, and we're achieving $2,950 today on those renovated units. So great traction, and we just wanted to talk briefly about it, since actually very little equity remains. As of today, given the strong interest we've had, we're 96% raised on that deal. So we've got about 400,000 remaining. We think it'll be a great deal. It's a great case study for the type of value add projects that we do, which is kind of come into an asset with a very specific plan, mark leases to market, significantly enhance cash flows through operational improvements. And so that one is well off and running. But we do have a little bit of room, if anyone's interested on the value add side, specifically, and would be happy to welcome a couple of investors to that deal as well. Typical check size that we're targeting is between 50 and 100 minimum, and certainly can go higher than that as interest presents itself.
Is there anything in the immediate future that you're seriously in negotiations for the next project?
I wouldn't say in negotiations yet. I mean, we're always active in looking at value add deals. It's been a slower market recently in the sense that the bid ask between sellers' expectations and where buyers can attractively finance and make the numbers pencil out has been fairly wide. But John and I are actively touring properties. We were at a property in Boston last week. We've put in a couple of offers, but we're not gonna move on anything unless we feel that we've got a high degree of conviction and that it makes sense for us and our investors. And so, some of that seller expectations are just very high right now compared to where we think we can make projects work. But we're actively looking in our development pipeline in Revere in particular. I don't know if you saw that slide with Sora. We're actively in a process there with some additional parcels in Revere that we hope to have some more information to share shortly on. But that's, it's in an earlier stage for us.
Yeah, perfect. Well, once again, nice job. Thank you for doing this. Excellent explanation. And, what the real estate business is, the axiom that people use, it's all about, local knowledge and local market. So if somebody wanted to deploy capital in this area and they're not from the area and they want to be in the multifamily, then, as an investor in these sort of things myself, I don't know Atlanta, I don't know Tucson, I don't know Boston. So if I wanted to get exposure, then I either put it into a fund or, co-invest with somebody like you. So I think it's a smart move. And I personally, without you being accused of giving tax advice, like the idea of doing it this way rather than the fund, because the goodies just pass right through, right?
Absolutely. No, it's a great point. And I hope many of the listeners on the call, are aware of that and recognize that it can be a very, very substantial benefit when you put, it's the same top level return, but after tax return can be very different on an asset like this versus, say, buying and selling a stock.
Exactly. So we have to wrap things up. I just want to announce that the next webinar is the 16th at 2:15 Eastern time. So just make note of that, our guests here, and share it with others. And then is there anything you want to just say to wrap things up?
Yeah, I think we'll look forward to being in touch with listeners on the call, and anyone who has interest in learning more. Very happy to schedule a personalized call to discuss how we could work together in the future. So thanks again, Arthur, and yeah, love to talk with as many folks who are interested as they're out there. So appreciate it.
You're most welcome, and thank you for doing this. It's a treat for me and the group. So thank you all for being here. And as I always say, thank you for sharing with us. The only thing you can't make more of, and that's your time. Till next time. Thanks, guys.
Thank you.